You're welcome to my channel. In this video we are going to be looking at input VAT versus output VAT. What's the difference between the two? How do we know that this is input, this is output? So input VAT refers to the tax that is paid on purchases of goods or services that are used for business purposes. So input is specifically on purchases. It can be for goods or services. So a business can claim for input VAT as credit against its output VAT liability. So before paying VAT, the business is supposed to get its output VAT minus the input VAT, then they pay the difference. So input VAT is usually reclaimable if the business is VAT registered and purchases are for taxable supplies. So examples of input VAT that we have is, for example, when a business buys materials from a supplier who charges VAT. The VAT paid on these materials is input VAT. Then another example can be when a business buys services like marketing or consulting or legal services. VAT is charged on those services and the VAT paid is called input VAT. So it can also be on raw materials purchased by the business for manufacturing. It can be on office supplies. It can be on services like marketing, consulting, legal. It can be on fuel and utilities like electricity. It can be on purchase of machinery or equipment, etc. So we have output VAT. So output is mainly tax collected on sales. So for input, it is paid by the business. So for output, it is collected by the business. So output VAT refers to the tax the business collects from its customers when it sells goods or services. This is the VAT that the business must remit to the Uganda Revenue Authority after deducting any input VAT that it has claimed. So before paying VAT to URA, they must subtract the input VAT. So output VAT is what is actually supposed to be paid to URA, but it is after subtracting the input VAT. So examples of output VAT, it can be when a business sells a product to a customer and they charge VAT. So the VAT collected from the customer is what we call the output VAT. So it can also be when a business sells machinery or equipment, when they sell fuel, utilities, services, office supplies, raw materials, etc. So input VAT, we said it is VAT paid on purchases, and it can be VAT on all the following: VAT on raw materials bought, e.g. cotton and steel, office supplies like computers, stationery, professional services like legal, consulting and marketing, fuel, e.g. petrol and diesel, utilities, e.g. water and electricity, machinery and equipment. It can be repair and maintenance services, advertising and promotional services, then transport for business use. Then output VAT, it can be collected on the following sales: the retail sale of goods like clothing, electronics, the wholesale of goods like bulk items to retailers. It can be on the sale of raw materials, sale of professional services like legal, consultancy and marketing, sale of machinery or equipment, sale of food and beverages in restaurants and cafes, hotel and accommodation services. It can also be on the sale of estate properties like commercial or residential. Then it can be on transport services, e.g. passenger transport and freight. So those are the examples on VAT collected on sales and then VAT collected on purchases, and that is all about input VAT and output VAT. I hope this video has been of help. Thanks for watching. Do not forget to subscribe, like, comment. Let's catch up in my next video.